Hi everyone, Jared here. In this video we're going to discuss how to use missed pivot points as profit targets. Now in previous videos you've seen what pivot points are and specifically what a missed pivot point is. Just a little review of missed pivot points. Remember, a missed pivot point means that the market did not touch it in the period it was created. Now in the previous video you saw what a pivot point was, and here is a daily pivot point right here. Well, you can see that this was on Friday. This is our 24-hour period. The pivot point was created, and you can see that the Australian dollar US dollar headed straight down and closed for the weekend down here. It never touched that pivot point during the period it was created. So at the open of the market, or the open of the next day, this is now considered a missed pivot point. Now remember, we have to wait until that new period begins. On a daily pivot point, we have to wait until the next day. And this is Friday, so we wait until Monday, and this is now a missed pivot point. And so when we use these as profit targets, they're great areas to trade back to. Remember that markets love to move back to pivot points. So as this is a missed pivot point, you can see that it ran, the Australian dollar US dollar ran about 120 pips away from that pivot point. And by the next day it started working its way back, and by the day after that it took about 2 days to get back to this level of the missed pivot point. But it made for a very nice profit target and a great little place to trade right back to. These missed pivot points make such excellent targets because they really have a pull on the market. They really tend to come back to those levels very often much sooner than later. So there was a missed pivot point that was hit. If we go to the 4-hour chart, we can see a few more examples. Here was another missed pivot point on a Friday of a couple of weeks ago. The day was created, it never got touched, and it took a couple of days to come back to it, but you can see all the way over here, actually on this little spike right there, the market came right back up and hit that pivot point. And it ran up a good little bit. That was 80 or 90 pips from that low to come up and touch that pivot point. They make excellent areas to target whenever we're in a trade. For example, looking at this Australian dollar right here, we have a missed pivot point from the 28th. You can see it's the 29th today. So the 28th has not been hit, and this is a great area to look to trade back to. You can see that we took a stab at that pivot point but didn't quite get there. Makes for a great profit target. Here's a nice little double top, something like that. Gives us reason to start looking for entry, and this pivot point can absolutely become our profit target. Again, on larger time frames we can see some great examples of this as well. The Aussie dollar has some really good examples of weekly pivot points being great profit targets. If we go back to about the middle of December, here's a weekly pivot point. The week it was created, it was not hit, and for a couple of following up weeks it was not hit as well. And then it took all the way till almost the middle of January, about a month, and the market came right back up and hit that level where that pivot point was missed. Once again, great profit targets. These missed pivots are so powerful in pulling the market back to it. Now remember, we always have to have entry criteria and reasons to get into a trade. We don't just start trading back towards a missed pivot point. But in this course we will cover all of the details on what those entry criteria are. But this video is really just to illustrate that these missed pivot points get hit over and over and over again. Here's another missed weekly pivot point. By the next week, came back up, hit that level. We have lots of missed daily pivot points and so on in here. You can see down here we had a couple of missed levels. Here's a pivot point that took several weeks to come back and hit. You can see that the Aussie dollar right now is at 87.60, and this goes all the way back to September, and that was at about 91.15. So it took a little while to come back to that, but that's been hit, and these pivot points just get hit over and over and over again and make for great profit targets. Here's a monthly pivot point that was missed for the month of October. You can see that the Aussie dollar pulled away from that nicely, but at the reset, as we got into November, it came right back down and hit that level. You can see it took a couple of weeks, but it came down and hit that monthly pivot. So these pivot points make excellent profit targets as they pull the market back to them on a very regular basis. And there's some very excellent ways to trade back towards these, but the important thing to know is that we should always be targeting missed pivot points because the market, more often than not, will always make it up to that pivot point. Hope this was helpful. Thanks everyone.